Hello everybody, welcome back to my channel where we talk all things finance and investing and saving money. Today's video, we're going to talk a little bit about whether or not the stock market is going to crash in 2024. That's right. The year to date has been very strong for the equity markets, particularly in the US, but the last few days we have seen a little bit of a sell-off, starting to hear more and more talk in the media in particular, but investors as well, thinking the market's about to crash. So what's it going to do? What is a crash? What is a bear market? That's the subject of today's video. I want to share all of that with you so you get a good understanding of this, and most importantly, what you should do if the market actually does crash in 2024. Stay tuned to the end of the video because I'm going to share a quote that I read one time that completely changed my perspective on stock market crashes and bear markets. And I'm going to share that with you, and hopefully it has the same effect for you and help you reach your retirement or your investment goals. Hi, I'm Jeff. I've been working in the financial markets for around 20 years. If you're new here, why not subscribe to my videos? I've got a lot of good things coming in and around finance, investing, saving money, building wealth. Over my 20-year period, I've seen all sorts of different active trading, buy and hold strategies, some amazing results and some amazingly terrible results as well. So I'm going to share all of that with you on this channel. So why not subscribe, and you'll get a lot more videos and learn a lot more about finance and investing. By the way, I should note, this is not investment advice. It's not an investment recommendation, tax advice, anything like that. I'm not a qualified financial advisor. I'm just passing on the information that I have for educational purposes. And remember, whenever you invest, your capital is always at risk. So with that out of the way, let's get into the video. So the stock market is going to crash. This is something I hear so much. Every time I talk to a new potential investor and we get talking about the stock market, they always give me the same answer. I think the market's going to crash. For a lot of people, I think that's just an excuse to not save and invest the money. They'd rather just spend it today than invest in their future. And that's fine, that's up to them. But for a lot of other people, I think there really is a genuine concern that the market is going to crash, and they're just terrified of that, so they don't go near it and keep all their money in a bank account over the long term, which is a terrible investment if you've seen some of my other videos. So let's get into a little bit about why that fear exists, and more about, whether it's justified, and most importantly, what you would do if the market did sell off. So let's get a few definitions out of the way. The first thing you want to know is, what is a correction, what is a bear market, and then what is a crash? Okay, so a correction is generally when the market is sold off 10% from a recent high. And that happens round about every year and a half for the S&P 500. A bear market is when the market is down 20% from a recent high. Obviously, that's a lot more painful, but not as common. It happens around every 5 years or so. A crash is kind of generally accepted when the market is sold off around 30% or more. And luckily, this doesn't happen too often, around every 12 years. Most recently, we saw this in the COVID pandemic when the market sold off around 35% or so. But 2022, we saw a big sell-off as well when interest rates rose quite a lot throughout 2022, and interest rate rises tend to have an inverse relationship with stocks. In other words, when interest rates go up, stocks tend to go down. And that certainly happened in 2022. But it didn't quite hit crash status of 30% or more. It was more of a bear market in 2022, with the markets down around 22% in that year alone. Some other notable crashes that we've seen over the last 20 years or so. When I started my career, the dot-com boom and bust took place, and that absolutely was a market crash. It lasted around a couple of years, 2 to 3 years in total from top to bottom, and it was absolutely brutal. And that was really driven by overvaluation and really just human behavior of a frenzy. The internet had just come out. Companies saw the potential of this, and the mania just started. And all of a sudden, you had companies with almost no earnings, no revenues, listing their shares on the stock market, doubling and tripling overnight. It was absolutely nuts. You had extreme valuations, and that led to a very hard crash over a couple of year period. Of course, following that, we had the global financial crisis in 2007-8 and finished up in 2009. The same thing, innovative products in the financial world, in the banking industry, led to amazing speculation on real estate prices, people flipping properties, buying multiple properties with money they just didn't have. And of course, it all came crashing down with an absolutely brutal stock market crash there as well. Then we went into the COVID pandemic, like I mentioned a minute ago, and then into 2022, where we hit a bear market. But those are some of the major crashes we've seen. Of course, there have been a lot more brutal ones. 1929 to 1932, this was the first time people started borrowing money to buy stocks. The market went up like crazy through the roaring 20s, but it crashed awfully hard and caused the Great Depression. So there's been some crazy crashes over the years. But like I said, it only tends to happen around once every 12 years. The thing is once the market starts to sell off a little bit, particularly after you have a big run up like we've had now, the media jumps on board. Recession, crash, it's all about to happen, overvalued. Perennial bears, people who believe the market is due for a crash, come out of the woodwork, they get airtime. You'll see it everywhere. And this starts to crawl on itself and people start to get really concerned that the market is going to crash. So will the market crash in 2024? In my opinion, the honest answer is nobody really knows. That's just how I see it after my 20 years of experience. You will always have forecasters, economists in particular, in my entire career with a 20-year period, almost always were calling for a 20% bear market. Didn't matter if the market was up 20%, up 30%, or down 20 or 30%. They expected it to fall 20% more. So there's a group of people that are constantly calling for the market to crash, and eventually they will be right. Like I said, around once every 5 years, they will be right. But this year we've seen the runs being driven up a lot by AI and tech, and valuations have gotten a little bit stretched in the US. But ultimately, whether that continues for the rest of the year or not, like I said a moment ago, nobody really truly knows what's going to happen. So if I were you, I wouldn't worry too much about a market crash. That doesn't mean you should be putting in a huge lump sum of money into the market now. Why? Because if the market does sell off a bit more, like it's prone to do, then you're going to panic sell, and that's one of the worst things that you can do. So if you're worried about the market crashing in 2024, and I don't think that's something you really should be worrying about, but if you are, then there are a couple of things that you can do to kind of protect yourself. The most obvious thing is to diversify a little bit outside of equities. So what would you do here? Well, you would raise some cash, maybe sell a little bit of equities in your portfolio and buy some, say, short-dated government bonds like treasury bills in the US or UK gilts. That's a place you can park your cash maybe for the next 6 months to 12 months till you see what happens. The other thing you could do, if you're in some high-flying tech stocks and they've come up an awful lot and you really be more comfortable taking a little bit off the table, coming out of the market a little bit, then you can do that and switch into sectors that tend to do better when the markets sell off. And those are things like utilities, consumer staples. Those are companies with very secure earnings. So that's a place that maybe you could park some money. But I think ultimately, it's not something that you should even really be thinking about. I think you should really just stay invested and not try and time the market so much, because that has had some disastrous results. And like I said, nobody truly knows where the market's going over the 6 to 12 months. I really believe that. So what do I do when the markets are selling off? When you get into a bear market or even worse, a market crash like the COVID pandemic, I'll tell you what I do. I start dollar cost averaging into the market with the cash I have in my portfolio. So typically I have around 10% of my portfolio just sat on cash. At the moment, I'm around 12.5% because the markets are hitting all-time highs. But if the markets come down 10%, I have an automatic policy where I just buy. Okay, I don't put all my cash in, but I do put some of my cash in at 10%, no questions asked. I don't even think about it. Automatic, I log into my account and buy. And then I just watch and see what happens from there. If the market goes down 20% and goes into bear market territory, I buy more. And sometimes I'm kind of dollar cost averaging the whole way down there. And if I get to 30, 35, 40% like we did in the COVID pandemic, I go to 0% cash. It can be a very hard thing to do. It can feel a bit counterintuitive to log in and start buying when everyone around you is screaming fearful and scary headlines about the markets. But I think it's the wisest thing to do, and it served me well over the years. In the COVID pandemic, I did it. I logged in and I bought, and I went to 0% cash. And I think it's the best thing you can do when the market's crashing. So ultimately, stock market crashes, although they're scary, are not anything you should really be worrying about. In fact, if you're a long-term investor, then I think you should be looking at it as a chance to re-enter the market and try and capture some great returns in the future. So I wouldn't worry about it too much. I wouldn't get too wrapped up in whether the market's going to crash in 2024 or 2025. The truth is we really don't know, so don't sweat it. So now I mentioned at the beginning of the video a quote I heard from a famous fund manager. His name is Peter Lynch. He ran the Fidelity Magellan Fund in the US for around 14 years or so, and it had some stellar results. But he summed it up best when he said, "Far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves." This is such a great piece of wisdom, and I've seen that over my 20-year period. People expecting the market crash, so they're afraid to invest, they stay in cash, and they missed out on phenomenal returns. You don't want to do this. You need to get invested, dollar cost average every month, but do not fear a correction, because you will lose so much more money over time if you don't go into the markets because of this fear. Keep a little bit of cash in your account. If the market sells off, then start buying in and capture some of those future returns. Don't sweat whether the market's going to crash or not. So that's my video on the stock market and crashes, bear markets and corrections. It's the negative side of investing, but you can make it a positive if you reinvest when the markets are selling off. Don't panic sell, obviously. That's the worst thing that you can do. If you think you're likely to do that, my suggestion is you reduce your exposure to equities now, because the last thing you want to do is sell at the bottom. It's a terrible experience and will destroy your results. I hope you enjoyed the video. If you did, why not give it a like, share it with a friend, leave me a comment, tell me what you thought of the video, and yeah, like and subscribe, and I'll see you in the next video.